Hello, and we are live. Are we? Just one second. Let me just do it out here too. Oh, sorry. Let me see. And we are live. Hello, everybody. Welcome, welcome, welcome. This is Sanchayata here. And welcome. I am actually trying to do this for the first time. I'm doing live in two different, in Instagram live and Facebook group live and YouTube. So it's just bear with me. But this is exciting and interesting. This is amazing. Oh gosh. Okay. So for those who don't know me, this is Sanchayata here. I am the creator of this group, Forex Diva group. If you are in the Facebook group or if you are on my YouTube channel, the Forex Diva channel, and I'm the founder of the forexdiva.co.uk website where I blog a little bit about my trading. And I trade the currency markets, the financial markets since 2010. I placed my first trade on 2010 and it was a very nervous, I was scared, whatever. But it's done, gone, and here I am, 10 years down the line, still trading, and very happy with the decision I took of trading from home, working from home, and I love trading, and so passionate about trading that I have opened a Facebook group, and there is exciting news I wanted to share with you, but not now, maybe perhaps towards the end of this, if you stay with me, towards the end of this, I will be sharing something very, very exciting and interesting for you. But before that, today's live session is as requested by you. I'm going to answer your questions relating to the beginners, the newbies. When you just start trading, you go through all those emotions of, what to do, where to go. And here I am. I wish I had something like that when I started, but there wasn't an Instagram or Facebook. Was Facebook there? No. Well, yes, maybe. Facebook was there. Instagram, no. Live, Facebook Live, no. But anyway, so here we are. Just want to say hello. Who else is there? Just want to say, oh, hello, Valerie. Valerie, yes, wave to Valerie. And I can't see, can I see a show? Who else is there? Okay, so I am seeing most of you live. Oh, wait, 1 second. I need to go and see my YouTube. People in my YouTube, if you have any questions, I need to know that. I don't think I did that. Okay, just bear with me. Oh, hello, Barry. Hello, welcome. And hi. I am using a thing called StreamYard, and if I don't call out your name, which means I haven't seen your name because you haven't given permission to StreamYard, but that's okay. I can still see your questions. I can see your questions, so that's fine. This is as far as YouTube and Facebook Live is concerned, but I can see you there on Instagram, so we're all good. We're all good. And this is amazing. I can't imagine, okay, I've got this right, technology. Okay. So how has been, the lockdown been treating you? Hello, Kinsley. Hello. For me, it's just, well, never ending, isn't it? When you have children and you have to, do all the home chores and, but I think I'm blessed. I'm lucky because I work from home. So actually nothing much has changed since the quarantine, since, the COVID, which means it proves that trading is a recession-proof business. It is a business. If you take it seriously, if you take it as a hobby, you'll never make money. If you take it as a business, as a profession, you will. And I've been trading for the last 10 years. At least I would know that. Anyway. Okay, so this session has been created because people, the group and my Facebook group, They said they wanted a session answering their question. They had a lot of questions, so we had a poll. They put the questions in, so here I am I have got a few questions there, so I'll read them out, and then yeah, we can go through all of them, answer all of them. So I'm going to have 3 webinars. This is the first. The first webinar, which is this, it is for beginners. The second webinar is going to be the second webinar is going to focus on technical analysis. So anything to do with technical analysis will be answered. All your questions about technical analysis, anything to do with technical analysis will be answered on the second webinar. And the third webinar, hi Gary from Instagram. The third webinar will be what was it? On mindset, on money management and mindset. So 3 different areas, key areas that we want to, we want to attend. 1 second, I want to get the comments up. Click on the screen to show. Okay. 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 All right. Got it. So hello. Let us start, I think. But before I start, I wanted to get the YouTube people, folks in YouTube, if you are, just wanted to see if I can get you there. Otherwise, how has your, what you call it, Sunday going? My Sunday, you know what? I actually got my family, my children, packed them up and send them away, because I was like, I can't deal with so many like technology, that and answering questions and getting, you know, everything sorted. I needed some space. I needed some breathing space. So I was like, okay, I'm doing this for the first time, you know, multi-channel. So that is why I feel like, you know, bear with me, but thank you so much. Thank you so much for, got it. Now I got it. Yes, finally. Finally. Oh, there you go. Right. So if there's any questions on YouTube, I'm good too. Right. So let's get moving. Let's get this started. Answering the first question. All right. This is from Roderick. Wants to know how to know what pair to trade, and when to enter and set your stop loss and take profit. Good question. When you want to trade, how to know when to which pair to trade? And there is something called a heat map. If you go to most of the platforms, you can go to TradingView. TradingView does a heat map. You can see that, and that could be one of the ways to figure out. There is a correlation between currencies, you know, and the heat map will show you red and green. So which currencies are fluctuating the most, and accordingly you can do that. That's one way. Might not be the best way, but if you know how to read heat maps, that's a good way to go for. Otherwise, find out, you know, figure out which currencies you want to trade. Like, I do not trade the entire whole jing bang. I don't. I have about, say, about 2 dozens of currencies that I trade, and I keep it that way. I do not just go willy-nilly and trade everything out there, because why? I have a trading plan which is necessary. I follow that trading plan, not just have a trading plan. I follow that plan, and those currency pairs are based on a lot of things. One being, you know, what is the spread between those currencies? You know, that is one of the major things, and that depends on which broker you go for. So all that calculations I do, and then I think, okay, fine, what currencies? The third thing you need to find out in the morning before you trade is go and look at the calendar. Not the calendar on the wall, like, you know, year calendar. Go and look at the economic calendar. You can go to Forex Factory, and then you can just go to Forex Factory, and they have the economic calendar. In that calendar, they will show you the economic news, the big news that's happening higher in the big news that's happening on that day, on that particular day. So it's best to avoid the news, the currencies. Say, so for example, how can I say this? How can I frame this? Right. Say, for example, the Reserve Bank of Canada is having some kind of like interest rate. They're going to announce their new interest rate. That is like a red flag, because that means, what I mean by a red flag is that the currency is going to fluctuate really. So best to avoid that particular day. Canadian dollar. Do not trade Canadian dollar or that particular time. Usually these news comes up at about 1 o'clock in the afternoon. So most traders either do not just touch that currency for the entire day, the main pairs, the major pairs, as well as crosses of that, considering those currencies. Or you can also say, okay, I'm not going to trade between that currency, that particular currency, between say 1 o'clock till 3 o'clock in the afternoon. And then once the market settles, because market does a correction, once the news happens, market, like, that currency pair could have like shot up or really down, like steep bars you get during that, that's news. That's called trading the news. A lot of traders trade just the news. It's hard. It's not really recommended for newcomers, for beginners. But that is it. You do not trade those currencies. But once during the news hours. But once those currencies, once the news settles down, then the market makes a correction. So you can trade that correction. A lot of people do that. A lot of traders do trade the correction. Or if you are fairly new, stay away. Stay away from news, because that's the most safest way when you're starting. Go for higher time frames, go for currencies that doesn't have any news. That is how you can perhaps know which pair to trade. And as you know, currencies, it's traded. It takes two to tango, so it is traded in pairs. So if you see a good trend in the currency, that's a good currency to trend. For example, Euro USD is trending up or trending down. If there is a strong, trend setting out there that you can see, then yes, by all means, trade that currency. A trending market is anyway a better market than a ranging market. What a range means that it's going sideways. You do not want to trade a ranging market, because, you'll be like, it'll be never ending. You'll just perhaps make a small, money. There are traders who trade ranges, nothing wrong with that. But a trending market is a much, a better market to trade, because it has movement, it has momentum, everything of that sort. Yeah. So I hope that answered your question. Is there any clarification? Classroom participation? Anybody interested? Okay. Anybody? Okay. I think we are good for that. We can go to the next question if that answers your questions. Okay. The next question was by Runjun. She says, how do I analyze the market and figure out the correct moment to jump in? Yes, I like that. I like that. It's a good question. How do I analyze the market? How do I analyze the market? It's like learning to play the guitar. It's like, it will come with time. You start analyzing the market by being in the market, by observing the market, by looking at more charts. The more charts you look, the better you get, definitely, in the market. Analyzing the market is a huge, it's how do I put this? It is like, how do I analyze it? It's a very broad concept. Or what you can say is that, how do I, you analyze the market, how do you eat an elephant? You don't eat an elephant, but I'm just saying as a, metaphor, one at a time, one bite at a time. So you cannot grasp everything in one go, but it might be a good way to start from just getting a chart out and just focusing on one thing, like, identifying a trend line. How do you How do you identify a trend line? That could be something to start with, analyzing the market. Sick cyclist says, please save your life in post. It's too amazing. The great. Okay, we'll do that. Thank you. Okay, so how to analyze the market? Just carry on. Do one thing at a time, which is like simple things like, how do you identify a trend line? Figure out, take 5 charts or 10 charts and go through each chart and then say, okay, fine, do I find a trend line? Is that an uptrend? Is it a downtrend? That is a good way to identify a trend line. And then once you do that, small, teeny, mini bites, small steps will get you there. But yes, analyzing the market comes with practice. And the more you practice, the better you get. It's like playing the guitar. You will not get, good in just one day. You cannot be Eric Clapton in just one day, but you will get better if you do 15 minutes of practice every day. It's like anything else. It's like a relationship. You cannot just go from, I met this person, I want to marry this person. There is in between a lot happens, and which makes you take that decision. And that decision, because of moments that you have lived, you have to at least have been in the market for about 18 months to 2 years to see all the different trends a market goes through. Still, it's not enough. Like, nobody has seen a pandemic. This is the first time, me as a trader, when a pandemic, the last that happened was 100 years ago. So, you learn when you are in the market. And once you have handled the pandemic, I have traded throughout the pandemic. So now I know what to expect. So the more you are in the market, the more you will know what to expect, or okay, so this happens. So, because technical analysis is about repetition of patterns, and you will fall in love with it. I do. I love the markets. I love the patterns. I think you can see the passion there. But yes, it's identifying it. You get to be Sherlock Holmes. You get to be, every day. There are 2 things the market does: is it can go up, it can go down. But you don't know which way it will go, next second, next day. We don't know. And that's what really excites me. I love that part of it. And that's why I love the markets. And nobody can just manipulate the market. It's small, 1-2 days, but the primary trend, nobody can manipulate that. And you are at the same place where with the big boys, with the big girls, with Warren Buffett, George Soros, everybody, the big banks, hedge funds, everybody is seeing the same chart you're seeing. So the market doesn't care where you come from, what you do, what background did you have, a financial background you did, it doesn't matter. It's about how good you are in trading, and that really excites me. So analyzing the market, figuring out the perfect moment to jump in. The perfect moment to jump in will be at when support and resistance. Once you know what support and resistance is, the market moves in from support to resistance, and when they move to resistance, that becomes support. Now, what support and resistance is, for example, imagine you are in a room and the floor is the support and the ceiling is the resistance. So if the price has gone to the floor, that means it has touched the support, which means that there is that line where it cannot break through. That price, for whatever reason, is unable to cross that line. So that line is really, that invisible line is really big. It's really strong. That something tells us that, okay, this is the support. The market is not going, the price is not going below that support line. So don't you think that once it reaches there, the only way is that it can go up? It can go down. Yeah, it can go down. There are chances. There is nothing 100% in the market, but there's always chances that the market shows patterns. It repeats. And that's why we get good in technical analysis. Shows us how, when it is repeated, what is done. Candlesticks shows us when it is repeated, what happens how the market turns. There are chart patterns, there are candlesticks patterns. These are guidelines that helps us understand which way the market is going. And is that a reversal pattern? That means, okay, that's an indication. Nothing is again 100% right in the market. Market can always amaze you, impress you, woo you, but the candlesticks patterns and the chart patterns can give us enough indications that what the market is doing. Candlestick shows us the sentiments, the psychology behind the market. What are the buyers and the sellers doing? So that is an interesting, concept to learn. So definitely combine candlesticks into your trading pattern. Another one I wanted to. Okay. Yeah. So moment to jump in. Summarizing is get support. You buy support as soon as you have in the support, the prices in the support, you buy, and then if price is in the resistance, you sell. You tend to go down. A lot of people do the opposite, especially newbies. Okay, so but here you go. You have me now. You have me to tell you what not to do. That is so important. What not to do. Oh gosh. I mean, I was like, oh, tell me what to do. Okay, but what not to do is equally important. But there you go. Okay, so Barry says, entering and exiting strategy without getting stopped out. And is it true that the big banks go for stop losses before continuing a trend? No, big banks doesn't bother. They don't care. There is. I'll tell you a story. One of my mentors, he's quite big. He's quite. He is a technical analyst, and he does that for a living. I mean, he doesn't trade. He just does technical analysis for prop firms, hedge funds, banks, and goes on giving lectures to banks. Anyway, and he teaches the bank traders for the banks and everything. Anyway, so his secretary, somebody in his company, she approached him saying that, my son wants to start trading. He wants to have a word with you. Can I take you for lunch? And he said, like, fine. And then the first thing he said was, why are the banks trying to, why are the banks against retail traders? And he nods and says, with his years of experience, you can make out that banks don't care whatever retail traders do. Retail traders, that is what we are, like retail traders, like people who trade from home. That started in 1996, retail trading. Prior to that, there was no retail trading. People used to trade. Only it was, trading was only done by the privileged. The banks did it, the hedge fund bank, the institutions, big guys. But it, with technology, everything opened, and they started trading. It was open to public suddenly in 1996 onwards. So which means anybody sitting at home can trade. The market was open. And that was when retail traders start. So anybody who's not a hedge fund, individual started trading. Excuse me, some water. So individuals can start trading. Sorry. Pardon me. Okay, so what that meant was that retail traders came in line, but retail traders make only about 5% of the entire industry. Sorry. I'm trying too fast. Sorry. So retail traders make only about 5% of this. So 95% of people are from the institutions and all that, the hedge funds, the banks and all that. And retail traders are like teeny mini 5%. So do you think that 5% will make any difference to those 95% who are trading, doing it for a living? I mean, doing it because they have to do it. They are market makers, and they are trading because they have to trade. Like for example, for example, um, there's a car manufacturing a company that is from Japan, has come to UK to do a to open up a car shop. So they come with a lot of Japanese yen, and they want go to the bank to change it to pound sterling. So that's an exchange that's done because of work is supposed to be done. It's not because of trading. So things like that happens, that gets the market up and down also. That's just what a few small example. So yeah, so that is how it is. Yeah, so retail traders, banks don't care about retail traders, and it's a myth that they try to stop us out and then they do all that. So no, that doesn't happen. The second question was entering and pardon me, entering an exit strategy without getting stopped out. Um, without getting stopped out, there are certain indicators that can help you to depends on what strategy or what trading system you're using as a stop loss. You can use the parabolic ZAR as a stop loss. That's an indicator. It just it's like a trailing stop loss. You can use that as an indicator to tell you that are you getting to help you from getting stopped out. Ichimoku. I love Ichimoku. A lot of people call me the Ichimoku girl, but I don't know. Cloud girl, no. But yeah, Ichimoku has, you can follow, you can put your stop loss as into Kijun Sun, into span B, depending on your, how much you want to risk your account. So that is another, way to get your stop loss in a way that can not getting stop loss. If you put your stop loss too close to the price, then you have this fear of getting stopped out. Again, it depends on a lot of things. It depends on your strategy. It depends on your time frame. It depends on how, if you're close, if you put your stop loss near the support line, or if you're going down in the resistance line, that way, and you can find out these levels of support and resistance. Why this level of, the first thing you find out is support and resistance, and why they are so important. They're important because then that if that is support and that is resistance, I know that is a room I have to trade. Within that room, I am going to trade. So that itself, 48% of traders don't know when they're doing it, especially newbies. If you have that information, don't you think you can trade better? Don't you think you can trade much more, have much more confidence? Okay, that should be, yes, that should be the question answered. Is Barry here? Yes, Barry is here. Barry, does that answer your question, Barry? Let me know. Well, I get through the next question. The next question here from YouTube, Xavier. How can one profitably swing trade? Oh, Barry, thank you. Yeah, thank you, Barry. Thank you for being here. How can one profitably swing trade with a small account using proper risk management while trying to survive the risk of the Forex swap? There are 3-4 questions out there. Swap is, again, it's if you want to swing trade in a small account, it depends what small account is. That's a relative term, because a small account for somebody could be 10,000, but somebody could be 50 or 100. So it depends what a small account is. But yes, if you use proper risk management and the swap, well, let me get into one. If you're using swap, that means you're doing you are trailing your stop loss, you're putting your trades overnight, which is called, that's why you have the swap. Find a broker who gives you swaps, who gives you better prices for swaps and spreads. That might be one option. Follow your trading plan, your risk reward ratio. That should cover your spread, should cover, and your risk reward ratio should cover your swaps, if that makes sense. If you have a small account, then lower your volume, your lots. That might be one way of using account. Okay, he says that most of the trading opportunities I find while doing my analysis are most of swing trading opportunities. Easy to take them demo account. Yes. Well, he says this is really interesting and very important too. Xavier says that when he does the demo trading, it's easy to take them in demo trading, but I know when I go live, the way it's different. Demo trading and live trading, two different things altogether. If you are trading live, if you're trading demo, you can be, there's a saying that you can be demo king, but once you go live, things can be different, because yes, markets are volatile. The market is, live market is live market. I know you are trading the demo account in a live market, but something happens out here when you're trading demo and live. And my suggestion, well, I can't suggest, but my I would ask you to consider a demo account only to know how to place the trade, how to push the buttons. If you are doing more than that, I mean, okay, fine, you test the strategy if it's working. But a lot of people say, unless you make 4 or 5 times your demo account, do not go into a trading account or a live account and blah, blah, blah. You will lose, you will give up which I don't agree with that, because that is my personal opinion. And I have traded live for the last 10 years. If you are in a demo account, uh, you will not learn much, because 80% of trading is psychology. If you can only learn. There are two ways to learn. One is by having somebody like a mentor, and the other one is by giving money to the markets. You have to have a live account, because that will give you, the faster you have a live account, at least as far as I was, my trading was concerned. I cannot advise on that. It is, you have to, take your own decisions. But for me, I started directly on a live account. I did not go to a demo account, and I think that's also a bit extreme. I think a demo. That's why it took me about 3 months to press the button. I was so scared when I started trading, and I wish I had somebody next to me to tell me what to do. But I just plunged in. I just thought that I had to go and trade, because I took a course up, and I have to implement that course. And I was also falling in love with the markets, so that helped. But I was equally scared. I was that the newbie rush. But live account, yes, anytime, because the market teaches you, your psychology changes when you are in a live account. And the more you are in a live account, the quicker you learn, because when you lose, it will hurt. It hurts. It really hurts. And it's good that it hurts, because then you will not repeat the same mistake again. Another question. With demo account, is it easier to trade with emotion? Live accounts, you need to trade without emotion. Live account, you need to control your emotion. That might be the right word, rather than not trade with emotion. And that way, so you have to have a lot of discipline. When I say discipline, I don't mean like army rule rigid, you don't have all that. A lot of people are that way, but I don't trade a lot. I mean, day trading, maybe 2-3 hours, that's it, because I cannot. There's a lot of brain power that goes into it, and then I have to take a break, and then I come back at once the market cools down after 9 o'clock UK time, and then I start looking at the charts again for swing trading. But yes, emotions will come in if you do not have a plan. Emotions will come in when you are not following your plan. Your trading plan is so important. Your trading plan will give you the, your how do I put this? Wait, when to get in, when to get out. If you decide things in advance, it's like a navigation. If you have the sat nav, it tells you where to go, how to go. Yeah, okay, you drive, but from A to B. So your trading plan is that. If you know exactly the steps of why you are entering the trade, if you know exactly the steps of when to exit, that I'm not going to give more than 35 pips. If it goes the other way, I'm out of the market. And if you stick to that, you have less chances of losing your account. And this is from losing a lot of accounts. Yes, I have done that. Should I be proud of it? Not proud of it? Maybe I have the confidence now because I lost accounts. And maybe I know now, and I can tell that you do that, that's going to happen. I know that now, and that has come from the experience I've gathered. Not proud that I've lost accounts, but that is the learning curve I had, fortunately or unfortunately. But yes, demo accounts, I do not suggest you do a lot. But then again, I cannot suggest because I am just another trader. It's up to you. The quicker you, and also one thing, when you have a demo account, you actually, that amount you have traded, you wasted your energy, your time, that money, if you have one, has not come to your bank account. So why would you do that? Carry on doing that. On what fear? Face your fear and trade live. That will get you months, country mile ahead. Because once you have a live account, then you will be more cautious when you're trading. That means you will stick to your rules. If you have a rule, if you have a plan. If not, please do, because that is detrimental to your trading journey. And we'll have another one for trading plan and all that. I can help you with that. And then once you are in a live account, then you can go ahead and figure out how, at the end of the week, what have you traded, where have you failed, where your failures are more important when you are starting your journey. That is what I can say from my experience, because that is where I learned what not to do. And then when I stopped doing that, suddenly I could see, okay, fine, some progress, and people like progress. We are always learning. We are in that huge learning curve that it's never, market is so big, so it's huge that you just bow to the market. Market is like, for me, market is like a temple. You cannot be bigger than the markets. You cannot. Once, that's called arrogance, that's called ego. I have that, the market will slaughter you. Just watch it. Market is going to do that to you, and then you come back to, then you'll say, oh, trading doesn't work. Oh, that, you start blaming other things. But then you actually, it's here. Once you figure out how to blend and how to trade with the market, that is when you start seeing progress, and you have consistency, and that's beautiful. That's amazing. And yeah, I can carry on saying about that. Okay, Xavier, one last question. I have other questions also. I'd suggest for new traders when demo trading to treat it like a live account. It is easier to say that you treat a demo account like a live account, but you cannot cheat yourself in your brain. You know that it's a demo account. If you just, even if it's like open a live account, trade micro lots. Do not go, just have micro lots and do not go out of your risk reward ratio. Risk reward ratio at least 1:2. If you're risking 1%, you have to get have a trade that is 2%. If you don't get a trade, don't do that. Next. That's like that's how you trade. That is how to control your emotions. You do not force yourself to trade, because if you do that, you might be giving the money back to the market, which I've done. Tell all the mistakes I hear, I know I have done it. I have done it, and that is why I can say that I know if you're doing that, that's going to happen. So there you go. You have that. I've said it. So it's up to you. Then you can you can learn from my mistakes and shorten your learning curve, trading journey, or you can just carry on going alone and giving money to the market and having a demo account or whatever. But it's your journey. But I'm here to help you if you want. This is why the whole idea of this Q&A is. Right. Next question. I'm so happy. A little bit thirsty, but there you go. Sorry about that. Okay. Annie Kimani says, correct time frame, entry, position, and exit. Time frame. All right. The correct time frame, again, it depends on traders. There are different kind of traders. Um, Trading is, there is no one thing that you want. Like, y- I have few people who, on Twitter especially, they message me and say, give me a strategy, and then I'll do that, and tell me what to do and I'll do that. It doesn't work that way. It's like, I cannot just give you a, how what do I say? I want to think of a good example. Wait, um, I cannot just tell you, eat this and then you will lose weight, or eat this, or first of all, forget about losing weight or anything. First of all, I don't know what your taste buds are like. I don't know, you know what I mean. If I tell you that this is the best food, but you do not even, it's like the best, and one of the ingredients in the food is onions, and you don't like onions, so what's the point? Trading is very, you need to know yourself better and trade according to your personality. And what that means is that, if I tell you that, yeah, trade the morning 6 to 7, because that is when you get the best trades. But you do a night shift, you do not get up, you do not wake up before 9 o'clock in the morning. So how that how does that work for you? It doesn't. So you have to find out where you want to be, what you want to, when do you want to trade. These are again trading plan. When do you want to trade? What do you want to trade? How do you want to trade? Which time frames do you want to trade? If I'm coming back to answering Annie's questions, Annie says correct time frame. The correct time frame, there's nothing called correct time frame. The time frame that suits you. Now, saying that, the time frame, the higher time frames are best as far as price action is concerned. Uh, I have seen 99%, well, I should say 100%, but nothing in life is 100%. Most traders that are successful, and I know a lot of them, and I have spoken to them, and I know them, they all of them that I know of have only trades higher time frames. Why? And higher time frames, I mean, the lowest they go is 1 hour, and then, but they do mostly weekly, monthly, daily, and 4 hourly. 4 hourly is like their maximum. You don't want to go beyond 4 hourly. That is where they see their levels and everything. But yes, that is what they say. Why? Because if I show you, like, I don't know, what can I? Okay, if I show you something like that, uh, you know, and then I say, can you read it? No, you can't read it. What is half of it? And then I say, okay, fine. Oh, that's a notebook. So when you see, when you get a 30-foot view, do you understand? You get a bigger picture. But if you only see, like, only something, it's blurry, it's, bloody blah. So that's a notebook. And, it's written positive vibes. You can see that because it's out here, right? You get a better picture, a bigger picture. So that is when you go to higher time frames, you see the bigger picture. And once you get the bigger picture, you can make your decisions. If you are going to a shorter time frame, a lower time frame than a weekly or a monthly or a daily, you see one time frame and then you go to the other time frame. But if you're moving towards different time frame, different strategy, then you're nowhere. Figure out one strategy that you're going to hone on, really focus on, whatever suits you. It doesn't have to be one that somebody pounces on you. You have to know that, okay, is it working? How do you know that it's working? Find out, do that strategy, only that strategy, or one account, one broker, one account, that strategy for 6 months, and then see the trades that you have taken from there. Is it working? If it is working, then that strategy is working for you, because you are able to identify that strategy. You are able to take that strategy in that time frame, and that's working for you. Perfect. That's how you get you make trading work according to your own personality. You have to get the time frame right. For me, for example, when I started trading, I was given bar charts, and I was given pivots, I could not relate to it, and I thought I failed. But it was not me, because I thought that I didn't get that strategy. I felt that I'm not meant for trading, but I loved trading, so I just carried on finding out more, and I understood that no, it was not that. It was that didn't work for me. And when I changed it to candlesticks, I identified, I knew, I was more informed about the market, and I felt maybe yes, candlesticks is more appealing to me, and Ichimoku is more appealing to me. Before that, I did other strategies. I did Bollinger Bands. I still love Bollinger Band. I did moving averages. So I know I know what I like now because I have done other stuffs. But there are a lot of strategies out there. One way to find out if the strategy works for you is take the strategy, give it a go for a bit, at least 6 months, and then find out if it's working for you, if you're getting enough trades, if you're finding out the trades are working for you. Find out, and then you'll know, you will know yourself. I hope that helps. If you can give me a yes, or if you're getting some aha moments, just give me a comment or yes, so that I'm not talking to myself. And if you're watching it live, just say #live. I forgot that, guys. Oh dear, and girls, where is it? This is my whole ritual. Every time I go live, I'm like, if you're watching this live, say #live. If you're watching it replay, say #replay. And also, I want to know where you are, joining me here from, which part of the world you're joining me from. That will be nice to know, because I'm here, sitting here in London in my home study, packed my girls out with my husband so that I can spend some time with you. There you go. Okay, thanks, Gary. Gary says good stuff. There you go. Okay, next question. Is it advisable to leave trade for more than one day? Barry, informative. Thank you, Barry. Appreciate that. Is it advisable to leave trade for more than one day? Everything depends on your trading plan. What do you want to trade? Do you want to trade long term? Do you want to trade like swing trading that goes overnight, and then some trades is 24 hours, 12 hours, 48 hours. Nothing is, it all depends on your, how you want to trade, your personality. Is that enough for you, for your trade? Pardon me. Is it advisable to leave trade for more than one day? Yes, as I said, it's up to you. If you want to leave it for one day, if it is making money, if it is going according to your plan, yeah, then by all means leave it open for one day. But again, I cannot advise you that. I'm not here to advise you anything. You have to trade according to the strategy. And you have to agree yourself to that strategy, that yes, I want that. It appeals to me to leave trades on for a day. If you leave it on, what are the consequences? So think about it that way. Okay, what will I get? I might get a swap from my broker. So how much am I making? Am I making that money back? So you do your own calculations, and then perhaps that might be a way to find out if you want to do, want to leave it on for overnight. If that helps, yeah, Kingsley. Gospel of Church from YouTube, live from Brazil. Well done. Thank you so much. Live from Brazil. Oh, sorry. No, he's from Zimbabwe. I read it wrong. My glasses. Hi, live. Brazil from Zimbabwe. Okay. I thought you were from Brazil, so I didn't read the rest. My bad. Okay. All good now. All good. So the next question, oh gosh, I'm going around. I'm living, quite hot, but yeah, it's good. I think we are done. Yeah, right choice, pairs to trade. We have touched that. Best strategy to apply. Again, best strategy is something that works for me or something that works for my neighbor might not work for you. It's like wearing a shirt, isn't it? There are different colors, different shirt types. It all depends on what you want, what fits your lifestyle, what fits your, if you're working the entire day, then day trading might not suit you. That day trading strategy might not suit you. But at the same time, if you so look for a strategy, end of day strategy, because the market is open 24/7, 5 days a week. Well, yeah, 5 days a week, 24/7, it's open. So find a strategy that works, that you can work around with, and then work accordingly. I hope that helps. Okay, so when to trade, we've all done that. Any other questions? I just also wanted to let you know that if some of you are new, anybody who's new who is not part of our Facebook group as yet, just say new post. You can just say new in the comments so that I know that you are new. If you are new, then if you could, you're most welcome to come and join us in our Facebook community, which is Forex Diva. If you go to forexdiva.co.uk/24FX, or if you go to my Twitter account, which is Forex Pro Diva, that's my handle, Forex Pro Diva. So the details are there. Or you can also find us on Instagram, Forex Diva, Facebook, Forex Diva. The whole idea is for you to just go to our any of the my Twitter handle or my Instagram or Facebook, and download the PDF that I have for traders. It's called the 24 FX, which is 24 resources and tips for Forex traders. Hope that you find that helpful. There's a lot out there that you can actually, I've recommended books, I've recommended signals, I've recommended economic calendars, something that aids you, helps you, resources for traders. That is one. So once you download that, it'll take you to our Facebook group where you can ask all your questions. This is all this entire life has come from the questions and the engagement that we have within the group. Also, I am extremely excited to let you know that we are now, because I'm so passionate about the markets, I have this group, this community, and this community has grown. And because they wanted more, I have now formed a membership, and the membership is now open. It is open. What does the membership does? It is, again, I have, it all came from the poll I created inside the Facebook group. I said, do you want a course? Do you want a membership? Do you want a bit of course, bit of membership? And the whole entire poll, the winner was, no, we want something that goes on consistently. So we had honed down on getting a membership. So a monthly rolling plan that helps you to answer your question, because trading is more like it's a marathon than you do a course and you finish it. You need help throughout. So this membership program is for you, for beginners, for traders, and I give what are the things out there. Once you are on, you get two sessions, one live session, which is a question answer sessions, blah, blah. And the other one is the lesson that we get, one strategy a month or one training lesson a month. It could be that. And then I also, because I've been in the industry for so long, I know a lot of traders who are professional, who teach people in the banks, who teach traders to trade, from different investment funds, hedge funds, banks. So I have I know them. So they are willing to come and say hello to you guys and inside a membership group. And that is kind of priceless. Because they don't need to do that. They like me, they know me. And I said, I have this community. Would you like to come and say hello to them and teach them something, related to trading? And that is how they do not do this for nothing, number one, and they do not have the time to teach new beginners. And so take advantage of this. The guest speakers are going to be awesome, and we have a lineup of amazing guest speakers throughout the year. So that is what you're going to get inside the membership. And also bonus, you're going to get the Fast Track to Forex course, which is on individually it's sold at £297, but that course is the entire, 5 modules that I have put inside the membership area. That will give you don't have to go anywhere else. That is all you need to start your trading journey, and to go inside your membership and start that. And we handhold you. You get the right support, you get the right training. Everything is there. So you need no need to go, because when I started trading, it was more like, oh, I had to take one from there, another course from here, another thing from there, and then put it all together, join it all up, and oh, I hope this works. Nothing. This is all tried, tested. So if you work it out, it's going to benefit you. So if I ask you to show that, so this is if you are interested, I would love to have you inside a membership program. And this is the link, forexdiva.co.uk/M3. I have named the membership as markets. See, I've gone on. I've named the membership Markets, Methods, and Mindset, because it's all the 3 M's. These 3 M's are needed, is required to get into a trading system, to get benefit as a trader, to get everything together. It's like like a recipe. Markets, methods, mindset. 3 together, blended well, the right ingredients, makes the perfect recipe for a beautiful chocolate cake. Trading. Okay, so that is the website you need. That's a link, Forex Diva. Let me just write it down on the comment section also, in case you want to just go there directly. forexdiva.co.uk/M3. All right. Yeah. Okay. So that is the membership link. So I would love to have you there. Once again, we give you 2 lessons every month. And we also have guest lecturers, guest speakers who come in, and they share their wisdom and their experience. That's a lot. Lot of traders don't know how to start, where to start. So we tell exactly how to go about it without beating around the bush. And if you can just focus on the modules that we have set out for you, that is enough for you to start trading. And then we have our monthly modules going on. So you need about for yourself, if you're new to trading, 18 months to 2 years to get some consistency. And this is not for somebody who wants to get rich quick. This is not for somebody who wants to be a millionaire tomorrow. This is about consistently creating an income monthly. And that can be, you can have it as a goal for, I want that particular amount for my holiday. I want to try that amount I want to keep that trading amount to go and, spend on my kids, or spend on myself or my hobby. So that can be your small little, trading account that you want to work on for a monthly thing that you want to, spoil yourself with, or a goal that you have. So yes, that is what I wanted to let you know. And I'm not going to open the membership. I'm not going to keep it open for so long, because I want to focus on who has actually committed to them, and then I'll go ahead and serve them. That's it. If it's you, I would love to work with you. I welcome you. Do let me know. The link is out there, and I would see you when I see you, right? And then the next thing, when is it? Next week. Coming week, I'm going to talk about technical analysis. Until then, thank you, everybody, for watching. Gary is from live New York. Well done, Gary. Good stuff. Thank you very much. I'll see you in the next live. You take care. Have a nice weekend. And Barry says, I'm a member, highly recommended and needed to trade safely. Thank you very much. So there you go. We already have members there, and they're raving about it. So thank you, Barry. And I will see the rest of you next week. And thanks for tuning in. And thank you for being here and hanging out with me. Yeah. Thank you. Take care. Bye for now. Okay, I have just had to, that was Instagram. I had to say bye. So bye for now. Take care. Right? How do you do? Okay, bye.